At the top of the model, you've got 6 tabs: historicals, amortization, projections, ROI metrics, and the overview tab. These 5 tabs make up the cash flow model. The 6th tab, called working capital, is a standalone tool that helps you estimate the net working capital requirements of the business. We'll address this at the end of the video. Now, let's break down the 5 tabs of the cash flow model. After entering in your assumptions, the historicals tab is what you'll want to focus on next. If you want to quickly check if a deal pencils, meaning if it meets your DSCR and free cash flow requirements, this is the only tab you'll need to be in. Throughout the model, the white cells are inputs that you'll enter, and the shaded cells are your outputs that are automatically calculated. So to see if a deal pencils, simply enter the company's historical financials, the seller's addbacks, and make any necessary adjustments. If you have your numbers in another spreadsheet, you can simply copy and paste your data over. A handful of rows in the Historicals tab and in the Projections tab can be itemized if you want to take a more granular approach. Simply click this Itemize button and enter in your sub-items. If you want to revert back to the top line number, you can do so by clicking here. And if for some reason you'd like to go back to the top line entry, you can click on the Itemize button again. The numbers you enter in either option are saved, so you don't have to re-enter the data over again if you decide to switch. Once you enter the inputs for these 4 sections, the model will automatically calculate key metrics like debt service coverage ratio, year-over-year growth rates, various margin figures, and your free cash flow numbers, which we've broken out into 3 different layers. You have unlevered free cash flow, which is your cash flow before debt payments. It's commonly known as free cash flow to lenders, and it's what lenders use to calculate your DSCR. Then you have your distributable free cash flow, which is your cash flow after debt payments. It's commonly referred to as the free cash flow to equity holders. If you have investors, this is the free cash flow that your distributions are paid out of. And finally, you have your usable free cash flow, which is your cash flow after both debt payments and investor distributions have been made. It's commonly known as the free cash flow to the owner. It can be used for owner distributions or reinvested in the business. If you don't have any outside investors, your distributable and usable free cash flow numbers will be the same.